Let's dive into General Motors numbers. Joining us this morning, Paul Jacobson is Executive Vice President and Chief Financial Officer at General Motors. Paul, great to have you here this morning. Thanks for joining us.
Thanks for having me this morning, Oliver. It's a pleasure to be here.
You guys have been part of a really fascinating story. It's been one the stock market and traders and investors have been glued to, Paul, as your shares up still 30% even after getting punished by investors after earnings. So I want to start there because there's some concern around guidance. There's some concern around what the analysts view as earnings that came in a little shy. So how does that play out, and should the market be concerned about these numbers?
Well, thanks, Oliver, for the opportunity to be here. And first, I want to thank the GM team for everything they did for a tremendous first half of the year and getting through some of the challenges that we've seen both coming out of COVID as well as the resurgence of the Delta variant. And the underlying business is really, really strong. So as we looked at our second quarter results, we were actually quite pleased with it. We were able to produce more vehicles than we originally had expected in the first part of the quarter, as well as achieving really, really strong results. Now, they were impacted by a couple of late recalls in the quarter, and I think that contributed to some of the noise. But overall, the underlying business remains strong. And as we look forward to the second half of the year, we opted to exercise a little caution. What we've seen recently in the supply chain, particularly in Malaysia, as it relates to semiconductor flow through, impacting our production in the short run, as well as what we're seeing in the Delta variant and its spread across the world, really. We thought it was prudent to exercise a little bit of caution, and I think the street reacted to that. We understand from the very beginning we've said that we're being cautiously optimistic about the year. Nothing has changed about the underlying demand or the quality of our vehicles, and I think we're going to be very pleased with the result that we have this year.
Paul, one of the things that was fascinating, I found really interesting coming into this report, and part of the reason why I was kind of surprised to see the stock get hit the way it did is because the analyst community actually here has had an unusually wide array of estimates. The spread here of what Wall Street analysts were looking for coming into your earnings was unusually high according to Bloomberg data. It seems like right now there's so much happening in the space that even the professionals are having trouble getting a grasp on what to expect, not just from your team, but the other competitors in your space as a whole. What's the biggest contributor to variance in the bottom line right now? Is it supply chain imbalances? Is it the demand side? Is it the speed at which you can get autos out there? What's the contributing factor that can swing that bottom line right now in your mind?
Yeah, you're right. I think there is a lot of uncertainty out there, and the good news for everybody in the sector is that demand for new and used vehicles is incredibly strong, and we've seen that both in our average transaction price that we've done, as well as the demand for cars that candidly dealers are selling them off the truck as soon as they deliver into the lots. GM Financial has had an incredible year with used car values coming off leases as well as credit performance, and that's all contributed to offsetting a lot of that uncertainty that exists and still exists around production. So when we went into the year, the prevailing view was that semiconductors was going to be a 6-month challenge. Since that time, we've seen fires at facilities, we've seen earthquakes, we've seen COVID, and just a lot of challenges that have contributed to it. So really from the beginning, what we've said is demand is strong. Consumers love our vehicles that we're producing with the new full-size SUVs and truck lines. And, our challenge is we just can't get the certainty of production in the short run. The team's done an incredible job of prioritizing those vehicles that are in highest demand and sometimes building them without certain components and then going back and filling those components when we're able to get those chips. And this is really managed on a week-to-week basis, and that hasn't changed from the beginning of the year. I think what you're seeing is because of some of the additional impacts, it's extending into the third quarter when most of the market believed that it was going to largely be behind us. And we're responding to that uncertainty, but the great news is there's nothing fundamentally different about demand, and there's absolutely nothing fundamentally different about our long-term thesis. In fact, we're we're using this opportunity to lean in and accelerate everywhere we can.
You obviously have that confidence in the future as you up the guidance in a big way from your previous estimate. So that clearly things are going in the right direction. I'm curious, Paul, in the CapEx plan and your goals to spend over $30 billion, $35 billion in the coming years through 2025. What could change that, or is that a set number that reflects confidence in the long-term viability of the EV industry? Because when you talk about things like used cars in the short term, it seems like a lot of people have bought cars. Is there any risk that as we come out of COVID, the demand slows if people have gotten the vehicles that they need? So how does that fit into the plan overall in the long term? Is there any variability in the potential of that spend that you've laid out? Less depending on how the economy goes, more depending on how the economy goes? How flexible is it?
Yeah, so I think you touched on all the challenges that are out there, and we've just gone through a robust long-term plan with the board of directors, which was a great exercise for us, and that's in part what gave us the confidence in being able to accelerate and lean in, taking up our investment in EVs and AVs from $27 billion that we had highlighted last November up to $35 billion to lean in, because what we want to be is make sure that we're prepared when customer adoption increases significantly, which we believe it will, in part because of the quality and capabilities and functionality of the vehicles that we're going to show to the market as part of our portfolio of more than 30 EVs by 2025. So we've got the confidence in being able to do that. What that plan demonstrated is we've got contingency capital available, and we'll have more details on those results and why we feel so confident at our Investor Day on October 6th and 7th.
The president says he wants half of all sales by 2030 to be clean vehicles. Paul, any thoughts on what GM's share in terms of its own sales by that time might be, traditional autos versus EVs?
Well, we're positioning ourselves to win in the EV space and be the market leader in North America, and that's what you see in the suite of vehicles that we've got. So we would love to hit those goals. We're positioning ourselves to be strong, to have the capabilities and have the technology. And what's unique about General Motors is, you know, we're one of only two companies that has a platform for EVs. So with the Ultium platform, that gives us the versatility to create new vehicles and new models with the same platform, because it gives us the ultimate flexibility. We're not just putting batteries into traditional ICE vehicles or going the hybrid route. We're going all in on EVs, and we feel like we've got a winning strategy, and we're grateful and happy to be leaning into that.
The first thing that I thought of when I saw the Ultium platform and reading about it is margin, and having something that's flexible that then can, I would think, lower the cost of being able to create new electric vehicles. I know that margin's going to be an important story going forward. In the past, the trucks and the SUVs were able to generate that higher margin product as we saw businesses kind of move away from the smaller sedans. So that margin story has been very important. Can you give my viewers some insight here as to what that might look like when you are dominated in the EV space and when you are seeing more of your fleet being sold as EVs? Is that going to be as high margin as in the past?
Well, not only do we think we can deliver EVs in the future at a similar margin to ICE vehicles, we also have a number of growth businesses and adjacencies that the vehicles are enabling through their connected platforms, and that's where the real growth opportunity is. I think that the engineering team is doing an incredible job around battery research, and you've seen the cost. The Ultium platform has reduced costs by 40% from the legacy batteries that we use in the previous versions, and that type of savings is going to continue. And we've got a good I would say pipeline of research to be able to lower battery costs, and we think we can be industry leaders in that space.